Welcome back to Hot Topic Accounting, guys. I got Darren here with me again. It's your host, Luke Bowman. Like we said in podcast number 3, we're going to piggyback off of the single member and multi-member LLCs and kind of get into some business entities to explain some of that to you guys, okay? So today, we're really going to focus on 2 pass-through entities, one being the SCorp and one being the partnership. And I have Darren here, the CPA, so he's going to go through and explain a little bit about the setup of an SCorp and partnership first, and then we're going to come back and ask about some differences between the two, just so we can give you guys a better understanding. So question 1 for you, Darren. Let's talk about the setup of an SCorp versus the setup of a partnership. What does that look like for those clients?
Well, a partnership is just a multi-member LLC. The IRS defaults it to a partnership, so there's really nothing you need to file to be a partnership. It's just automatically a partnership. Now, if you want to be an SCorp, there is an election form that goes with that has to be filed with the IRS. It's Form 2553. So just to kind of recap, the partnership is an automatic entity selection, and the SCorp is a tax election that has to be made.
Okay, so the SCorp you're saying is a tax election that needs to be made on a Form 2553, is that correct?
That is correct.
Now, do I file that outside of my tax return during tax season, or when would I go about filing that to kind of switch over my single member LLC to an SCorp?
Yeah, a lot of times when you first set up the LLC, if you know that you want to make that election, you can make it at that time. Otherwise, you typically file Form 2553 separately, and it has to be filed by March 15th of the year that you want to be classified as an SCorp, and the IRS has to approve it.
Okay, so that's important. If you guys didn't hear that, listen up again. That Form 2553, the tax election for S corporations, has to be made by
March 15th of the year you want to become an SCorp.
March 15th. March 15th, perfect. All right, let's talk about a little bit of the differences between a partnership and an SCorp. I know we're kind of limited on time. There's so far we could go into this with all sorts of detail. Let's keep it shallow. What are 2 of the most important things to realize here when it comes to the differences between a partnership and an SCorp?
Well, the 2 major differences have to do with payroll and self-employment taxes. And I know we touched on those a couple of podcasts ago. With these entities, they're called pass-through entities because the income that the entity makes passes through to the personal return on a Schedule K-1 to be taxed at the personal level. You're not taxed at the entity level. So on the payroll side of things, the SCorp, the IRS requires you to take a payroll. Now they say you can take a reasonable wage. They don't actually tell you what a reasonable wage is, but you have to take a payroll. Now with a partnership, if you're a general partner, you're actually not allowed to take payroll. And the reason for that being is when you have that pass-through income on an SCorp, that pass-through income is only subject to income taxes on your personal return and not self-employment tax, which is basically Social Security and Medicare. On the partnership pass-through, not only is it going to be subject to income taxes, it will be subject to those self-employment taxes.
Gotcha. So again, guys, with these pass-through entities, the SCorp and the partnership, they're not taxed at the business level. That's going to pass through on a Schedule K-1. All you guys that have your self-employed businesses, you guys are probably comfortable with those forms or used to seeing those. With a partnership, again, we are subject to self-employment tax. And in SCorp, we are not, okay? And can you kind of get back into the payroll and why that ties into the self-employment tax?
The general partners, they're just considered, just the way the code is set up, they're just not allowed to take a wage. But they can take what's called a guaranteed payment. And what that is no matter where the profit or loss is on the partnership, they can take the same draw every month, no matter if they make money or lose money. They got to keep it standard. Now that guaranteed payment that comes out will be taxed on their personal return as well, and that will be subject to self-employment tax.
Okay. Okay, perfect. Well, there you guys have it. We talked about partnerships, a little bit about guaranteed payments and what those are, a little bit in lieu of payroll, as well as SCorps, why they're not subject to self-employment tax because they are required to take a reasonable wage. And that's kind of something that here at Harrison Tax and Accounting, we kind of roll with that reasonable wage. Let's talk about the reasonable wage a little bit. Is there a set reasonable wage, quote unquote, that's in the IRS code, or where do we get those reasonable wage numbers at?
Yeah, the IRS code really does not say, but I think the expectation is that you would pay yourself, what somebody in your same position working at another company would pay themselves. So if there's a way to find average salaries or average pays for a certain position, I think you kind of have to look at that to determine what you should pay yourself. And to piggyback on that self-employment with SCorp, when you pay yourself a wage, they do withhold Social Security and Medicare. So that is why when you pay tax on a pass-through, you're not subject to the self-employment tax because you're taking it out of your pay.
Exactly. Darren, thanks for your time today. We appreciate it. We appreciate the knowledge that you can bring to our podcast and share with our clients.
Sure.
Guys, thank you for tuning in. Again, this is a little recap on partnerships, on SCorps, self-employment tax, threw it all into one. Any questions, you know where to reach us. Our Harrison office is 513-367-5566. Our Lawrenceburg, Indiana office is 812-537-1205. Thanks, guys.